It seems like they are accelerating. It seems like they're only $200 billion apart. That's a lot closer than they've been in a long, long while. So I think the market's just implying or pricing in the fact that something will get done, whether it be a two-bill strategy or something. It seems like something will get resolved and the markets will get back to business.
Do you see then, after the deal is done, if the deal is done, that we'll see a pullback on US equity markets, and how big would that be? Or do you see money moving out of bonds and sort of more safe haven assets and into equities?
Yeah, I think we're going to have a beta chase until the end of the year. Right now, the S&P is trading around 1430. That's the post-election high. We're about 2.5 points away from the year-to-date high. I don't think it'd be much trouble to get near the year-to-date high, so I don't think we're going to fall off. I actually think we're going to rally if this deal does get done. I mean,
you are kind of also pointing out, though, that, one thing we need to be wary of is that really, I mean, the two leaders need to go back to their parties, though, and make sure that they're on side.
Yeah, no, that's a big risk because Obama has to go back to his colleagues and Boehner has to go back to his. And that's the big mystery. But it seems like, markets don't get fooled very often. When you look at implied volatility across asset classes, except for gold, but if you look at oil, you look at foreign currency or the stock market, I mean, volatility is down quite a bit today. And it's been down every day for the past 5 or 6 days. So I don't think the markets are fooled and the markets are pricing in that something will get done, even though it's very, very hard to sell this to their colleagues.
Can you just explain for us the Plan B legislation that Boehner is putting forward? Just explain for us what's sort of being worked out, because obviously it looks like this could go past the actual deadline.
Yeah, I think there's a couple Plan Bs, but I think the Plan B that they're talking about is letting the Bush tax cuts expire, but then quickly resolving that the first week of January. So in effect, they won't expire, cutting some entitlement spending on the other side, not raising the age of Social Security beneficiaries, and a couple other compromises. But that's the Plan B, to quickly let everything expire, as it were, but to pick up in January and just get the deal done.
What's your sort of thinking? I mean, will then markets focus on, the debt ceiling and the ratings agencies and any kind of likely downgrades that may happen? Is that kind of going to be the next thing for markets to look to?
Yeah, and that's one of the things that Obama and Boehner are talking about right now, about a 1-year or 2-year debt ceiling issue. But at the end of the day, they both are deeply concerned, or should be deeply concerned, about the ratings agency. We know it happened about 18 months ago in the U.S., and I'm sure that could be quick to happen again. So I think a lot of that is more headline risk, and in actuality, they'll come together and nail something down pretty quickly.
Larry, I'm just going to get the view of our guest host, Gavin Stacey from Barclays here as well. And your thinking on, Gavin, on, this next kind of issue for markets, the debt negotiations in the US, and any likely kind of ratings downgrade. I mean, we saw the impact that had, back in 2011.
Well, that's right. So the fiscal cliff is obviously occupying everyone's attention here and now because it's the first hurdle to get over. But as you rightly point out, we've got a series of hurdles on the fiscal front this year in the US. And indeed, 2013 and into 2014 is the year when we think at Barclays that they're actually going to address some of these longer-term fiscal issues, where they've got to remove, say, $6 trillion from the forward estimates in terms of this budget deficit. So there are going to be some big issues that need to be addressed. Thankfully, the US economy is looking better. When the economy is in a sort of a grinding upswing, it's a much better place to be negotiating some of these tough fiscal decisions than if the economy's imploding. So I think 2013 is going to be better, but of course this fiscal drag story is just going to gather momentum as the course of the year. But you address some of those medium-term issues, and that can in turn buoy confidence in the economy that the government is doing its job. The long-term outlook for the US is looking better, and therefore the markets and the private sector can get about doing their business. So there are some obviously fiscal issues, but so long as the government the House, the Senate, the President all work together towards resolving some of these issues, I think the markets can be buoyant throughout 2013.
Okay. Larry, what would you be getting into then if that's the sort of, better picture emerging from the US in 2013 and, we do see a bit of a pullback or even correction after the fiscal cliff is resolved. What would you be getting into then in terms of, equities or other investments?
Yeah, on the equity space, I like stocks like Boeing, Halliburton, Occidental, some of these high beta stocks that really haven't rallied with the rest of the market. And with high value, I think that's just going to continue. I mean, there are three names off the top of my head that I think will continue to do well. When it comes to groups, I like financials and materials over energy and utilities for 2013. And I did read almost all of Barclays' 125-page report last week that came out. So I think they might agree with that, but I do believe financials and materials will lead the way, because one thing that we're not really fully recognizing is the tailwind that the recovery in our housing sector is going to provide for our economy.